Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. Hope everybody's having a great trading session. Happy Thursday and happy Yom Kippur for those of you that are celebrating. If you're here on your Jewish holiday, I hope you don't get too hungry. I think it's fasting is part of this holiday. Is that correct? For those of you that are of the Jewish faith, perhaps might be able to clue me in a little bit, but I remember, one of my old colleagues, Kip Cohen. I used to know all the Jewish holidays pretty well because he observed them, and so whenever he wasn't around, I would step in for him and do some analysis in the markets for him and his folks. So, but I don't know them all. They kind of just creep up on me when they come. Like yesterday, my kids are like, "Hey, we don't have school today." I'm like, "What? Oh, what?" I had no idea. Anyway, hope you guys are doing well. Let's talk about where we're at in the markets, and we've seen the dollar strengthen. And actually, I put on dollar yen short, and I'm not liking it. I'm underwater a little bit, but the good news is that my dollars elsewhere are doing quite well, so I'm not too worried about it, but I think the dollar yen should turn somewhere around here. We're up pretty good. I expected us to stall, here at the 109.60 to 65 level. You can see we continue to spike up. So let's figure out how far that's going to go, because I am short, and I don't mind being short the dollar yen, but I don't like how it's squeezing either. So here we are at the 50% retracement. I think we might be able to get up to 109.90. That's I think possible. Let me grab the bias chart really quick. Thought I had it up and running. That's what she said. You guys are so funny. You guys are so funny. Look, no one's laughing this morning. Man, you guys are like a tough crowd. Holy cow. 109.70. Is this thing on? Just kidding. Chad says, here all night, tip your waitress. Yeah, that's right. I'm here all night. Oh, wait, 109.90. I'm sorry, what did I say? 70, 90. 109.90 is possible. Obviously, support here is key. So that is 109.10. Sorry, I got this microphone in my face and I can't see anything. Let me make an adjustment here. Excuse me really quick. I was adjusting my microphone this morning, and the damn thing, because it's I should show you guys sometime how it's set up in my office, but the stand to the microphone is on this desk, and the desk, the way it's made, it's not made in a way where the stand or the brace, the clamp, it's actually a clamp, goes onto my desk too efficiently. So every once in a while, if I adjust the microphone, the clamp comes undone and then everything falls. And that happened to me this morning. I was like trying to adjust the microphone, and all of a sudden everything breaks. It's like, whoops. All right, let's go. So let's go through the market. So here's the euro dollar finding support around the 618 retracement. I don't want to write that down, obviously, as support. So, and what we should find some support around here, which is good if you're like I'm still long the euro sterling. It bounced, thank God. It was getting kind of close to my stops, but if you think about like this, I don't want to delete everything here. So let's go over to another one that doesn't have any drawing on it. So here, let's delete that. Okay. One of the things you got to be thinking about at this point is this, you know, right? So that's why somewhere down here, we might find some support. So I'm thinking between here and maybe this 117.16 is going to find support. So I'm going to write 117.20. Actually, I think it's going to find support ahead of that. Resistance. Well, if we're flagging, or not even so much flagging, but really developing like a just a channel, which is entirely possible right now, could look like that. That means we should have some resistance back up here at 118.10. So if we spike back above 118, I think you can be a seller. If you're a euro bear, look, I'm really kind of neutral. I am neutral to euro as a whole. I'm not really super bullish. I'm not. Hey, Dom. By the way, Dom, good to see you, man. Hope everything's been well. It's good to have you back. Carl says tosses eggs. Dude, that's hardcore, man. I mean, it's one thing if you start throwing like vegetables at me, but like tossing an egg, come on. Anyway, I'm pretty neutral to euro, but I'm bullish and bearish other currencies. So that's where, like the crosses will come into play. One of the things, and what, this has nothing to do, well, it has everything to do with the euro, but not everything to do with, like, one of the things I think the euro could be supported here is euro yen. Euro yen found, I mean, look at this. Well, it was a hammer that was on the 4-hour chart, but see that 78% retracement. Reason why the euro yen is such a big deal. Look at this weekly chart. That is a 13-year trend line, and we are back at it now. I would be really, really worried about the euro yen if we break through these lows that we hit a couple of weeks ago. So, if the euro yen breaks 128, I would not want to be long. Let me just put it that way. Okay. But I wouldn't want to be short while we're so close to 128 either. Does that make sense? So, like, the euro yen finding support here makes so much sense to me. And that's why, the euro dollar, I can't get super bearish here. I'm skeptical of that. Like I said, euro yen breaks 120, 128. I would almost say you got to short the euro dollar just as a proxy too, but that we're not there yet, not even close. All right, so here's the sterling. Sterling kind of buckled under pressure, which is I'm happy about, just because of the euro sterling long that I have. But this is false breakout here. Okay, that should lead us back to support or lower. So I'm going with the 139, 137.25 levels again. And you guys remember, our biases are very neutral right now, almost across the board. I hope you didn't get sucked in. Like, I'm so bullish the euro and got sucked in yesterday, it's like, oh my God, it's going to rally. And then you got really aggressive yesterday on a euro long, and then it, crumbles, as we are in just a range bound environment. Aussie, this one, following the data last night, I'm surprised the Aussie didn't try to squeeze past here. I know the headline number was really weak, but man, the unemployment rate was like 0.5% lower than expected. I was surprised that we didn't try to just squeeze back up here. But the fact of the matter is the headline number really is weighing on the pair. So support is going to be 72.75. Resistance now is 73.50, and that's key. That's key resistance. And next support is 72.75. I don't have a huge opinion of the Aussie either at this moment. Other than, obviously if we go risk off, then you got to be short the Aussie somehow. But, and Kiwi, great GDP number. We were getting towards flag resistance last night, and I'm surprised that we're just maintaining the flag. But that also means that this bottom of this flag will also offer support. I'm going to actually write down support as this 38% retracement, just in case we do one of these, just in case we go bloop, bloop, you know what I mean? So I'm going to write down support as the 38% retracement at 70.30. And resistance is 71.70. That's right. And that's key, right? Because if we break 71.70, that's a breakout. Like I don't really care about it, the Kiwi, while we're below here. And by the way, if you're not in the chat rooms, you're just if you just listen to the webinars, but you're part of the ForexAnalytix family. I went long some Aussie New Zealand this morning. I said something on the webinar, and I'm just letting you guys know I bought some Aussie New Zealand at 92. So in the chat room, so I'm getting long some Aussie New Zealand. They're 127% extension of this move, 261% extension of this move, right? Very divergent relative strength, very oversold. The 78% retracement comes down a little bit lower here. We're not close to that, but I think it's just due for a bounce, personally. Now that bounce might stall at 104, but I think it's due for one. Oh my God, this Rand is ripping. Is anybody else long the US dollar Rand with me? Dom said pound GDP was also released earlier. I know it was, the GDP numbers were out of control good, but again, it's looking at the rears. So it's looking in the rears. Anybody else long dollar Rand? Because we're almost at the 38% retracement. It's a 200-day moving average. We're slightly above. I might dump mine here. I'm going to sell some. Hold on. Let me go into the trades room here, guys. See, for those of you that are not in the chat rooms, I'm going to go backwards really quick to, I just sold a little bit of my, $14.60. I just had to take some profits there. It's, it's it's the 38% retracement. So, wait a second. And that's got to be a 38% retracement, but wrong 38% retracement. Dumbass. We're just slightly above. It's fine. It's fine. I mean, you got a lot of confluence here anyway. That's my fault. Holy cow. But this is what happens when you wake up at 3 o'clock in the morning, every morning. It's like, sometimes you just like, duh. We are above the 38% retracement, but previous support should actually, and I mean, look, we're getting a little overbought here. So I'm just, I don't mind reloading. So what I'm going to do this is what I did yesterday. I reloaded it when it came down to 1440. I missed my bid at 38 too. I had two bids out there and I got one at 1440. And then I had another one at 1438 and change. And I mean, it literally must have missed me by like 10 pips, like, or not 10 pips, like 10, like 2/10 of a pip. Anyway, I'm gonna reload it again on a move back down here towards 1450. So I'll put my order in here in a little bit, but that's what I want to do is I just want to keep playing like a core long, and but those are pretty good moves for the rand. I mean, percentage wise. So it's been one of my pretty good trades this month, like from a take home profit perspective, and that's not even that's excluding my rollover fees, which are pretty hefty in this pair. Anyway, okay, back to what we're going through. So dollar CAD. So I bought some dollar CAD yesterday. Actually, I played it 3 times on the long side yesterday. Scalped it twice for like 20 pips a piece too, and then I picked up a position yesterday. And I'm not up huge, but it's, grinding higher. Thing is, this is this triangle. So 126.10, 127, those are breakout points. They actually might be slightly ahead of that, but those numbers like 26.20, 26.90, but those should confirm. So that's that. Swissy. So look at this damn thing. When I got up this morning, I'm like, oh, it's breaking out. We broke above that 40. So now, while we're above this trend line, you have to actually turn this one almost into bullish. Hold on, let me double check something. Yeah, so you got this big daily trend line coming in. That's a risk. That's going to come in right here at basically 92.80 to 90. I'm going to write that down. This is going to, shoot, sorry. That's going to turn it bullish. We break above those levels. That will turn us bullish. Okay. Not yet, but getting close. Support, because see this red trend line right here? Actually comes in right there, right? Really close. And horizontal resistance. And look, the Swissy looks good. It does. All right, support down here at 92 by the time we get there. I would say keeping everything in range, guys. It sucks for me too. Norway, got to bounce off that trend line that we had drawn yesterday. Remember, the 200-day moving average is coming in right there. So that's huge support. 855. I'm going to write down that 855. That's going to be big support. It's 200-day moving average trend line. What did we write down yesterday? 855. Oh, same thing. Okay. So that held. 873 is obviously key resistance. That flips us immediately from bearish, which we are, to bullish. Because, again, double top for those of you like Dominic. I know Dominic's just joining us again, so kind of getting you back in the groove. So double top, breakdown, bearish, right? 200-day moving average supportive. Pair hasn't dropped like I thought it was going to drop. We get above 173, or 873. It becomes insta bullish, kind of like instant ramen noodles. Like, stick some hot water on it and boom, there you got ramen noodles, right? So this is going to be like insta squeeze, I think, if we get above 873. Okay. You're welcome, Dom. Moving right along. Dollar max. So dollar max, as you guys know, 1980, 2003, I think is the number we've been writing, but really it's just, just 1980. And again, I will reiterate, the fact of the matter is the dollar Mexican peso is not going down, even as stocks squeeze higher. So got to keep that in mind. Dollar index. Oh, that I didn't see. We broke it. So now, wow, look at that. Next resistance is 93.20. We should be supported right here. So we should not get below this now. There. We should not get below 92.70. What did I say? 93.20. I'm not flipping it to bullish. I think you could say it's bullish intraday, but the bias really still has to be more range than anything, right? So just let me reiterate for those of you that don't know this, because I have to explain this from time to time. Sorry, just rubbing my eyes really quick. The biases are not necessarily intraday, right? The bias really is telling you what the general direction of that asset is. So when I have range, that means when you're talking about risk reward, try not to be super aggressive and try not to be too conservative either, right? If I know something's bearish, like if it's US dollar Norwegian krona, it's bearish, right? I know we're in a bearish trend and there's a bearish setup because it's a double top and we've identified where the neckline is, blah, 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 blah. Let's say we get up here towards resistance and right around 872, Girth did this in the chat room. This is exactly the way he should have played it. He shorted it up here a week ago. I saw him in the trades room. He's in Norway and he bought the krona right here because you know that when you're at resistance, like 870, where's the chart? 873, you're at 872, 873. You're in a bearish trend. There's a double top. Well, then lay into it. Like get a little bit more aggressive right there at that resistance because it's key resistance. If as long as it holds, you want to be short. You know what I mean? So that's how you play those biases. If you're like, well, I agree with you, Blake. I think it's really struggling going down and you want to be, and you're like, you saw this trend line that we had drawn here yesterday and you're like, I'm going to get long at that trend line. So let's say this morning you got long at 857 this morning because you were noticing that divergence with risk, blah, 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 blah. Well, if you're getting long the US dollar Norwegian krona and we're in a bearish trend, then you shouldn't be taking big positions. It shouldn't prohibit you from trading it. It's telling you don't be super aggressive if you're going counter trend. That's why, because I will trade any asset, any direction, anytime. Like I see the euros dropping right now. I'll get long. You can hold a gun to my head and say, get long the euro, Blake. And I'll say, okay. But I'll buy a very little position because I'm more bearish intraday. Does that make sense? So I'll buy one lot instead of 10, right? It's all about position sizing. So like I said, I can trade in any direction at any time. It's all about how big of a position I'm going to take. And that's driven by what the bias is for me. So when you see me trading in a lot of when you see me trading in like quarter sizes, half sizes, it's just because I'm not super convinced about the direction. When I start going full size, that means I'm very directional in the market. Does that make sense? I hope that all makes sense for you guys. Okay, back to it. Chad says, so it's all about size. Sorry, bringing these things full circle. Yeah, it's the motion in the ocean, baby. It's not about all size, everything. All right, not on everything, but in trading, yes. Motion of the ocean. I'll make myself laugh. All right, I'm glad no one else laughed. Okay. Tip your waitress, Chad. I'll be here all night. Tip your waitress. All right, continuing on. I don't know if the other guys.
The jokes are getting worse and worse, man.
They are. I know. Horrible, horrid. At 44.30. That's because nothing else matters here. So 44.30. I'll write same numbers as yesterday, and you have to stay bullish while we're in that range. Now, I know that I think that the risk is lower now, and we talked about it. I think the stock market is actually on the verge of pulling back, but that doesn't mean that it's not bullish. It's still bullish. I think we're at risk of actually, reversing here in the next couple of days. But the charts are still bullish until they're not. The trend is still bullish until it's not. Okay. Lastly, how crappy is silver trading right now? Holy cow. 23 bucks. We flushed stops there. Now let's see how far we can go. I mean,
I'm adding just a little bit here, just a little bit.
You're
small.
Such a sucker. Just kidding.
I am sometimes. I am.
Okay. Hey, you know what? At least you have a bias, and that's the thing. It's like, I if you have conviction, you have conviction. Like for me, I'm more like I'm just worried about the price action, as you know.
That's because it's measured in years and not days or hours.
Yeah. From a trading perspective, I look at silver and it's like, man, and I know I've referenced this the last couple of weeks, just not trading well. That low is at 22. Basically, I know we spiked a little bit below it. I just believe this is going to be key. So I'm going to go 22 and multiple asterisks. Might as well put a dollar sign on it. Just so. Okay. So resistance now. I mean, if you're bearish, right? If you're a straight up bear, you should not see a move back above 23.40 now. And I'm not going to put in a bearish designation yet. I think we're at risk of it, but I'm not putting it in yet. I think it's trading heavy, as you guys know, but I still think we are range bound, right? But man, we start getting below 22 bucks, and you're gonna, then we're really at risk of we're at risk of this move.
We're at risk of 19 afterwards.
Yeah, I do believe that this becomes more of a possibility, right? We start flushing through this support. So that's why, yeah, I mean, it's fine being a buyer while you're above 22, but man, we start getting down there and you got to have to be really careful. Gold. We broke through 1770. So now any move back to 1790 should be sold. Okay. Intraday. Or 1780, call it 1780. And our next stop would be somewhere down here. 618, a lot of congestion over here. So that's going to be around 1735. Again, I want to put it on bearish, but I'm not going to. I want to, but I know we're more range bound right now than anything, but it's still trading heavy. Hold on really fast. I just sold my Canadian from yesterday, guys. for like 35 pips. Where's my dollar? Oh, that was 30. Okay, sold. Thought it was said 35, but it wasn't. Sold. We're in the triangle, so I just I'm gonna scale out as we get, up here. So, right. I was long from yesterday. I just got out. So just FYI. That doesn't mean it can't go up. I'm just, I'm playing inside of this triangle. So just letting you guys know. Okay. Where am I at? Sorry, Stelios. I know you want me to finish up. Like, dude, anytime. I know you're thinking it, so you don't have to say it.
I am not. Come on.
Blake, please shut the hell up so I can get on with my day. Thank you very much. That's what you're thinking. 49,000, 43,000. 43K. And I don't know if Steve's going to be here.
He is here.
Oh, he is. Okay.
Yep.
He's not going to be here.
Hey, Steve. I know he's
Hey.
he's trying to manage around some appointments. So good to have you. All right, guys. The bias charts. Bias charts finished. I'm going to leave it with you guys. And sorry I took so long. Die cable, die. Okay, die kiwi, die. I'm good. All right. I've let it all out.
Now I understand why you went to the military.
Yeah. Oh shoot. Oh, hold on. My Rand. Oh, okay. Yeah. Okay. I was like, damn, my position's small. I forgot I just exited some. Just taking some profits off the table. All right, guys. Hey, have a good one. I need to go take a shower because I've got another.
Because you smell.
Because I
see
smell.
you, man. By the way,
Yeah.
Dominic's back in the chat room. I haven't seen him in a while. So
Yeah,
that's
it's
nice.
good to see Dom.
That's nice. We like him.
All right.
Okay.
Bye-bye, mate.
See you guys.
So
So,
stocks are going a little bit lower. The dollar is rallying a bit. Metals are getting creamed. It's
yep,
just fun.
why not?
It's funny. It's funny. I'm adding a little bit to my, I already had the very small position in gold, silver, and some miners, and I'm adding just a little bit more. I'm way below the size that I really want, but we're coming up to pretty big support in silver, 22s, low 22s. So yeah, I'm going to take a little bit. And if we do get to 19, that's where I'm going to get filled my whole position. And
Yeah, we
be
kept
happy
saying that neither of them look healthy if you look at them in the short term and the way they've been behaving.
Yes.
And, am I surprised to see them dump lower? I'm absolutely not surprised to see them dump lower. But as I've said in advance, in my opinion, the market is just, kind enough to want to provide us with another amazing buying opportunity. I'm absolutely fine with that.
Yeah, it's been one of the most difficult things for me has been for the past weeks, months actually, to wait for lower prices because I know that in the medium term they're very attractive levels, but we've been talking about it that they might go lower. So it's been very difficult to just sit and wait. But we're
my
doing
only
it.
exposure is in physical, and they have absolutely no intention of letting it go. So I'm completely price insensitive having to do with that. It's a buy and hold for decades thing. So
yeah,
I couldn't care less. It's going to give me the opportunity to probably buy extremely cheap in the spot market as well.
Yeah. Otherwise, crypto's also going down a little bit, but they were up yesterday and they're just giving back yesterday's gains. So really nothing major to talk about. We were talking about, speaking about metals on F.A.C.E, let me just check something. Hold on, 46. Yes. We were talking about, Basel III, the regulations that are coming into force on 1st of January, where the banks now have to hold 85% of physical gold and silver for their positions, their paper positions. And, I was saying that this is a really nice way for them to get spot price down and hopefully get some physical. But and Ryan argued, they said, look, they're not going to leave it until last minute, right? No, they're already.
Oh, yeah, absolutely. No. You don't do that last minute because that might,
Yeah.
turn out really ugly.
Yeah. But this is just such an opportunity to get, to do that for them now. So
and to be honest, Stelio, looking medium term, a break below this trend line support is a big technical development. So
yes,
I think that's going to get a lot of people very, very, very bearish, and that might produce indeed some decent follow through. But as you said, $19. Now I'm very skeptical if we're actually going to make it there. But if we do make it there, I'm going to consider that a gift horse, and I don't intend to look at it in the mouth before I do something about it.
Yeah, I'm going to be filling my whole position there. So anyway, let's see what happens. Anything else to say? Oil is consolidating above 72 or close to 72, which is it's just a big, it's a big bull move it's had in 2021.
But the breakout has been, has already happened.
Yes,
the day before yesterday, confirmed yesterday.
Yes.
So I see absolutely zero reasons why somebody would want to be short. In fact, I'm going to argue again that, in my opinion, this is a move that has a very high probability of bringing us to new multi-year highs, with upside targets being at 81.25 and 86.5 once we penetrate through the previous high at 77.14. So that's what I think about crude oil. Nothing has also changed in natural gas. Yes, I know. We're seeing a reversal today in this vertical move, and at some point, something like that has to happen. I'm monitoring this steep ascending channel here depicted in blue. We break through that, and we will finally know that we're getting some type of a decent pullback, which in my opinion is going to prove to be another buying opportunity for natural gas. So obviously being long up here is kind of dumb. But on the other hand, in my opinion, getting bearish just because we get a corrective move is also going to be a big mistake, because in my opinion, natural gas is in a big, strong uptrend, and I don't see that ending anytime soon. The main reason why all these moves are happening is one, and it's called inflation, right? Now, copper still consolidating, nothing major there, pulling back today. Nickel, same thing, but neither of those are actually turning bearish just because they have a negative day. That doesn't apply to platinum. That remains, in the defensive. We've said that 850, 860 is the next downside target. Same deal here with palladium, that we said any rebound to 2200 is probably going to be a buying opportunity. Most likely this rebound we're seeing the last couple of days is another corrective rebound. I think there is more downside in palladium as well. Now, having to do with the FX world, yes, we are seeing the dollar strengthening today, undoubtedly. And having to do with the 4-hour chart, this is what I'm looking at. We're breaking through this rectangle that opens up the upside target, which is the measured height of this formation being, what is it, 93.40, right? So we confirm the breakout from here, and we're looking for a move towards 93.40. Now, it's not by accident that we're seeing this rebound in the dollar, coinciding with another turn lower in indices pre-market, although we had quite a nice recovery yesterday. But look at where this recovery stalled. We back-tested this horizontal support resistance area as resistance, and once again, we got rejected from there. So I can't really blame anybody that wants to be short against 44.90. I mean, from a risk reward perspective, it's not a bad idea, as long as, of course, as you're fully cognizant of the obvious fact that we remain in a prolonged uptrend, and we haven't yet managed to break through this wedges, ascending wedges trend line support, right? So personally, I think that by being short, you're jumping the gun. That doesn't mean that it can't work, or it doesn't mean that the risk reward, as I said, isn't there. But you know, we've talked about before the death by 1,000 cuts just by trying to be short every single time. There is some appealing short-term risk reward in being short, right? Because we've seen these markets are extremely strong. Like it or not, it is what it is. Now, having to do with currency pairs, in my opinion, the Kiwi still looks by far the best. Yeah, I know we've seen this pullback from this channel trend line resistance, but so far we have, what is it, 2, 4, 6, 8, 9 days of more or less consolidating the prior gains and without really retracing much of the prior price action. In the vast majority of the cases, this is a continuation type of a consolidation. So until proven otherwise, I do think that the path of least resistance remains higher for the Kiwi. You can make the same argument for the Aussie. Yes, I mean, the pullback has been stronger than in the case of the Kiwi, but I still think that we might have seen the low in the case of the Aussie as well. Same with the rest of the commodity currencies. My preferred one, of course, remains the USD NOK, right, which is trying to completely retrace yesterday's losses so far today after finding support at the confluence of the 200 daily moving average and this horizontal support resistance area. As long as we trade below 874, I personally see no reason why somebody would want to be long, but that's my personal point of view. In the case of USD CAD, you can make the argument that the CAD doesn't seem that strong, so the pair doesn't seem that weak. But if we do break through this trend line support, I think this also opens a lot more downside for this pair as well. So, in the spotlight today, obviously precious metals first. That's why we made a mention there. And the dollar and stocks coming second, and let's see how this day is going to develop. But it does give us some signs that we might be getting some volatility, which is always a welcome and positive thing, right? So I'm going to, I'm kind of optimistic about what today can bring. It might actually bring some things some technical developments to talk about, and that can produce some buying or selling opportunities. So let's see if that ends up being the case. Also, USD yen, we mentioned it yesterday. Quite a nice recovery today. We've already retraced all of yesterday's losses, but don't forget that there is no bullish breakout here until or unless we break through 110 and this channel trend line resistance, right? So nothing major has changed here yet, despite the nice reaction after yesterday's sell-off. Technically speaking, nothing has really changed. Nothing changed with yesterday's sell-off, and nothing has changed with today's move higher. I guess that's it, more or less, what I had to say. So let's go through looking at your questions. So let me open the chat box. There we go. NZD-GDP was also released earlier today. Yes, I think Blake made an explicit mention about that, so no reason for me to go over it again. Curious, what do you say about the SEC? I'm from the time I'm assuming that had to do with, that was a question for Blake, but that doesn't prevent me from looking at it for you. There we are. Some kind of a complex corrective move playing out here, if you want my opinion. Not sure we've broken down yet. My medium to long-term thesis is that we're headed lower. The question is, have we seen the high? And I think it's too early to answer that question. We might still be in some kind of a more complex consolidation. As you see, we can define parts of it like channels, etc., but there has been no impulsive move higher or lower yet, right? So yeah, there is some chance we've seen the high, but I would want to see more evidence. So I think the jury is still out having to do with it. I do believe that we're headed much, much lower though. And, having to do with what would the pivot area be, I think below 920, I would be more than comfortable maintaining a longer term bearish bias. Okay. Unity GIF Blake, that horse has bad breath. Says Bran. I'm assuming that had to do with my comment about the horse gift. And you reiterated the question about SEC. I'm assuming that Blake didn't answer that, so now you know. I think we need to wait longer to make sure that we found the high. We might have. I think we're headed lower, but as I said, I'm not sure yet, right? I want to see more price action, and most importantly, I want to see at least one leg lower with some proper momentum behind it, and we haven't done that yet. But I'll be more than happy to visit it frequently on the webinar, like every couple of days, and monitor how it develops. Since you're interested in it, and usually I don't mention it much, not for any other reason, but the vast majority of the people don't even pay attention to it, right? My pleasure. Okay, anything else, guys, gals? Anything else you want to see? By the way, stocks do seem to be pushing lower as we speak. As I said before, you can be short against 44.90. The risk reward is there. What would the next downside target be if we're talking about like the short-term outlook? For somebody that would want to be short against 44.88, 44.90. In my opinion, the next downside target in this case would be 43.90. Okay, and after that 43.50. That's what I believe. So yeah, there is still some decent risk reward. Yeah, I did cover all the questions. Anything else, guys? Hey, Steve, can you check at Euro Kiwi? Yeah, absolutely. We've had several looks at it during the past several days. If you remember, I explicitly said that what can save these pairs is some risk off, right? And this is what keeps them from going. And by going, I mean going lower for the time being. Here's the Euro Aussie. Here's the Euro Kiwi. Keep in mind that the Euro Kiwi, despite all that, it's still consolidating below the broken channel trend line support, right? So in my opinion, it still looks, like a good short. And we've talked about it that, the Kiwi pairs look like much better shorts than the equivalent Aussie pairs. Here's the pound Aussie and here's the pound Kiwi. Look how the pound Kiwi also, in this case, the Kiwi pair, the pound Kiwi in this case, looks like it's just building a bear flag below this broken channel, right? So if you're asking me, I still think that these rebounds, and of course, if you want to be short, you're going to go with the Kiwi pairs, right? For obvious reasons, look like nice shorting opportunities, as simple as that. Of course, I'm not implying that the pound Kiwi and the Euro Kiwi can be moving lower while the Euro Aussie and the Euro Kiwi moving higher. Obviously, that's not the while the Euro Aussie and the pound Aussie, sorry, are moving higher. That's obviously not the case. But what I'm saying is that since clearly a pound Kiwi and Aussie Kiwi are underperforming, if you want to be short, that that's your preferred instrument to be short in this case. And obviously, you're going to start making some good money once we go back in risk-on mood. Not that we've actually had some serious risk-off mood. We just had a stall of the risk-on mood and a little bit of a consolidation, right? These pairs obviously tend to do much, much better when risk is on. Why? Because simply the commodity currencies like the Aussie and the Kiwi are much better correlated with risk assets than the Euro and the Pound. That's simply why. Okay, anything else? I can look for you. My pleasure, Alexandra. Okay, everybody. So see you tomorrow. As I said, I'm cautiously optimistic that we might get some stuff happening today, which is going to give us a lot more to talk about tomorrow. So have a wonderful rest of the day.
Thank you,
Bye-bye.
Steve, and everybody else. Thank you.
Thank you, Stel.
Cheers.